Today is July 7th, 2025, just 2 days before a critical deadline in U.S. trade policy. On July 9th, sweeping reciprocal tariffs across a broad swath of trading partners are set to either be finalized or suspended. Investors have been anxiously watching what unfolds because this decision could send shockwaves through the markets. In the heat of battle, I say naughty things. You have been warned. Are you not entertained? On April 2nd, or Liberation Day, or the day that wrecked my own personal portfolio, President Trump implemented massive tariffs, 10% across the board and up to 54% on China, triggering a historic stock market crash. The S&P plunged roughly 10% in just 2 days, erasing around $5 trillion in market cap. The Nasdaq dropped over 10% briefly, entering a bear market. The VIX fear index spiked past 45, levels not seen since the 2020 pandemic panic. Federal courts later blocked those tariffs, and markets rebounded. Then in early April, a 90-day pause was announced, set to expire this upcoming Wednesday, July 9th. If tariffs are reinstated, the S&P 500 and Nasdaq could see moderate to sharp corrections. Expect a 2 to 5% pullback for the S&P or 5 to 7% for the Nasdaq, based on what happened on Liberation Day. Tech stocks would be hit hard due to global supply chain exposure, especially with the Chinese market producing a lot of electronics. Apple's going to get wrecked. Industrials, autos, retail, anything tied to trade will feel the squeeze. Inflation would likely tick higher. Economists forecast 1.5% CPI impact, squeezing consumer demand and constraining the Fed's ability to cut rates. Lately, the markets have been jittery. Asian stocks slipped, bonds rallied, and oil prices fell amid tariff confusion. U.S. futures also turned lower on the prospect of tariffs resuming on August 1st. Analysts warn investor optimism might be misplaced, even though the S&P and Nasdaq trades near all-time highs. Wage growth, inflation, and stock valuations could make any tariff shock more damaging. Here are the major risks as we near July 9th. Unilateral implementation. Failure to reach deals with the EU, Japan, or India could mean steep unilateral tariffs, up to 50%. Inflation trigger. Higher import costs would feed into inflation, forcing the Fed to reconsider any rate cuts. Global retaliation. Other nations could retaliate, escalating a full-on trade war that further hurts global markets. Volatility return. The taco cycle. Tariff threat, dip, pause, bounce, looks set to continue. But there could be a light at the end of the tunnel. Limited trade deals are reportedly in motion with the EU and UK, which could delay or soften tariff action. Previous pauses led to market rallies, and many investors see President Trump backing off at the last minute. The Trump always chickens out taco pattern. Let's look at strategies here. For investors navigating this high-risk environment, there's some options. You could diversify into defensive sectors like staples, utilities, healthcare, less sensitive to trade. You could rotate into resilient tech, especially software companies with domestic revenues. Hedge with options or bond commodities. Watch ongoing diplomacy. See if any progress with the EU or Japan could lift markets. Or, what I think I'm personally going to do is sit in cash and don't fuck up. So what is the Centurion going to do? Well, I've often thought about this since the Liberation Day, and we've been riding too high. So maybe this bubble is going to burst. I feel that sitting in cash and not fucking up is maybe the best strategy. So I might just liquidate my entire Robinhood portfolio as soon as the market opens on today, the 7th here. What I'm going to do with that, I might just buy VT and just wait to ride the storm, see how it goes. But I think getting out of the covered calls this morning is probably my thing. And here again, I'm not your financial advisor. I'm just telling you what I'm going to do for the market. I'm just some guy on YouTube, clearly. But I like to show people, what, real money looks like in this market. So, in short, July 9th is this pivotal flashpoint. Tariffs could disrupt supply chains, stoke inflation, and unsettle investors. But do you have diamond hands? Are you going to hold? You're just going to hold on to what you got. Delayed or limited action could offer a temporary reprieve. You might do nothing. You might do nothing and be all right. But expect volatility and be prepared. I'm Centurion Investing, and we'll keep you updated as the clock ticks down on Liberation Day Part 2.